Hey folks, we're back. It's now time for Tax Tips with Beth Bennett, and I'm your host BKP here with Beth from H&R Block. Beth, how are you today?
I'm great, Brian. How are you?
Really good. And we have this week, you want to talk about education tax credits, and just in general, there's credits out there that people don't realize are available.
Absolutely.
And there's two sides of that. You need to know about it in advance if you can to plan for it.
Correct.
And two, you need to go somewhere and have somebody take care of your taxes that knows what credits are available.
That's what we're here for.
So tax credits is one of our major topics this morning. What say you?
What say I? I thought we'd talk about some education tax credits. Now's the time. A lot of the students are just now getting those forms in, and I just want to remind everyone of the credits that you can take, which is, it's not just your tuition. It is your books, supplies, a computer. If you bought a new laptop, that counts. Your parking, any tolls, any just fees, anything to do with your college other than your room and board and your eating, you can take off as a tax credit, and you can get up to $2,500. It's a really big credit. It's very helpful to parents who have, students in school, or if you're paying your own way through school. It's a very beneficial. Don't want you to miss anything. So make sure that you have that form. It's one that we ask, as we sit down with clients each day, that's when we ask them, like, oh yeah, I forgot that. Go get it. It's worth $2,500.
Well, now let's break that down a little bit. So first of all, when we talk about education tax credits, there's up to $2,500 available.
Correct.
And this is important for students, but it's important for parents that have kids in college, that they're paying the bills. Mm-hmm. But then if you are taking continuing learning classes, those are eligible also. So you got to keep track. So if you're for your career or whatever, and you're taking further education, and you're taking a couple classes a semester or working towards a degree while you're working, you keep track of that. That's important to you. Your books, driving back and forth, parking passes there, whatever may be your cost. It's important to keep track of that.
You are absolutely correct, Brian. Keep good records. Good records is what will save you lots of money and headaches and audits.
Well, let me say this on tax. Explain for our audience and me also, because it gets confusing. What's a tax credit? Like you when you say a tax credit, what's that come off of? Does that come off your taxes? Does that come off your total earned? I mean, what you owe at the end, does that come off? What is a tax credit exactly?
That's a good question. Most people don't understand that. So you get tax deductions, right?
I'm on the most.
Yep. So the standard deduction, if you itemize, we call that above the line, which means that's reducing our taxable income. Okay. If you take a deduction, okay, that's above the line. That's just reducing your income that gets taxed. If you get a credit, that's below the line. Now I have my taxable income, and I'm going to get some credits that give me actual. So that kind of reduces the tax then, right? Because at this point, it's kind of complicated, Brian. A credit is at the bottom of the tax return. I owe $5,000 in taxes, but I get a $2,500 education credit. Now I owe $2,500, but I had this much withholding. It's just not that simple. But
so when I get it, when you're saying above the line, that's your taxable income. So you start out with a taxable income. Anything that's taken off above the line, could change the amount owed.
It changes the amount taxed. So,
right. It changes it. That's where you come up with a taxable amount.
Correct.
Okay. Then below the line, right? Mm-hmm. Below the line, you then you start applying your credits, because that below the line says this is, now you apply credits, and that could reduce the amount of tax owed.
Perfect. Do you need a job?
No, Actually, I don't think I could do that again. But I got that far. I don't think I could do that again.
It's very confusing for people, and especially with the new 1040 that they simplified and it went to 6 pages instead of 2. It really made it easier.
I almost told something I shouldn't tell. Well, I did take accounting class.
You did?
Yeah, you know why?
Why?
I was a pretty girl sitting right over here. So I'm sorry. In high school, I'm just saying. Yeah, accounting?
Back in our day, it was mostly girls.
You're taking accounting? So am I? Sorry, wrong direction. I apologize. Let's stay focused. Tax tips with Beth Bennett.
Maybe sleeping with the dogs tonight.
All right. So we talked about education tax credits. What else do we want to talk about?
So now we're going to talk about a deduction, which is the Schedule A. Everyone calls that the long form. And itemizing. And some people still can itemize, Brian. It's not dead and gone. It's just harder to achieve that because they doubled your standard deduction. And so you want to take the one that reduces your income the most, right? And so for a lot of people now, if you've been in your house a long time and now most of your payments going to principal versus interest, you don't have that much mortgage interest. So it's really hard to beat the standard deduction. But if you just bought a house, you've got closing costs, you've got your interest, the bulk of your payment goes to interest now, right? And then depending on the cost of your home, if you bought $100,000 versus a $500,000. So don't just rule out that you can't itemize anymore, because you still can take your medical. It is limited to, you have to have more than 7.5% of your income. But you can take it. If you take a lot of prescriptions and go to doctors on a regular, versus I just get sick and I need to go to the doctor for that. But if you're going on a regular for continuing issues, you can qualify. You might have enough on there. You can still take your mortgage. You can take your state taxes withheld off your paycheck. You can take your property taxes, your charitable contributions. So there's still several things on there that sometimes people might meet by just doing one item. Sometimes people might inherit money or some, for whatever reason, and they donate that just entire amount, and then they meet it just by doing that one thing. So don't rule it out. If you have those forms and you've been paying those things, bring it in and let's put it on there and see. It doesn't hurt to try, because you want to reduce that taxable income as much as possible.
Well, let me just say this. Most of us don't know these answers, and I don't know. I'll just say maybe there's a reason the government doesn't want us to know all these answers, and they can make it very confusing. But that's where I really want to say I recommend seeing Beth Bennett and her team at H&R Block, because they, right now this time of year, we're in February, people are rushing to do their taxes, and that's what you think. I just got to run and do my taxes. But realistically, there's so much out there. Planning to do your taxes year round could be very beneficial to you.
Absolutely.
Save you on taxes, the amount you pay or the amount you're refunded. What else do you have this morning before we close?
So one of the other things that I haven't talked about yet was part of the CARES Act was that if you withdrew money out of your 401k last year because of COVID,
right,
then the penalty is waived if you're under 55 and a half, and you can spread out that distribution over 3 years. Because a lot of people don't understand, when they take the money out of their 401k, that's taxable. Okay? When you do go with a financial advisor, or whoever is managing that account for you, they generally just have you withhold 10%, which is just the penalty, typically, right? But then you have federal and state taxes that could be due on that. And it, not only that, it increases your income. So it still goes above the line. It becomes taxable income. And so it could raise you from a 10% to a 12, 18, 22, depending how much you take out, which really changes everything on your tax return, because then you could phase out because your income was too high and lose some credits that you got before. So this is a really big deal. It's very beneficial to anyone who might have had to take money out of your 401k because of COVID, you were out of work, or health issues. You get the penalty waived, and you spread that out over 3 years.
Well, that's great news, because I know several people that were cautious about taking money out of their 401k, and then people that had no choice but to meet living expenses in the last year with their 401k, and this year there's no penalty.
Correct.
There's no penalty this year.
And then you divide it. Just say you got 30,000, just to make it easy. Only 10 goes to taxable this year, 10 next year, and 10 the following. And that's a big deal. I mean, that could save you 10% in taxes by doing that.
Folks, that's why I recommend Beth Bennett at H&R Block and her team. How do they get in touch with you, Beth?
HRBlock.com. We are open every day of the week. We'll come in early or stay late, whatever works for you. Just give us a call.
And I do know this. If you're out there and you have your schedule, they have hours of operation, and your schedule is you're really busy and you can't get in during their normal business hours, call them, because her team, they will set up a time for you. They will make sure that they work with you to get you in on your schedule, not just their business hours. Another thing I want to recommend is they do business taxes all year round, and when you come in, if you have her team do your taxes, they also not just do your taxes, they will also help you put a game plan together for next year.
Correct, even on your personal.
Even on your personal, that's
on
right.
your personal.
Say next year, while you're doing a tax, you say, next year we recommend this, this, and this, and you can go away. And they're year-round available to answer your questions. You could share tax tips with Beth Bennett from H&R Block with all of your friends. Just go to FYNTV.com, click on Tax Tips with Beth Bennett. Share this with your friends. Thank you very much, Beth. I appreciate you. Now, you know I have to get to the pet of the week.
I know.
Did you say hello to the pet?
It's a very happy dog, too. He really likes people.
Happy dog. Right after this. Can't put it any better. Happy dog next. Thank you, Beth. Enjoy it.